What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to kind of briefly describe to you phase two with my dividend portfolio and with the M1 Finance one. This is kind of an experiment month. And again, the goal is to get to X amount of shares and get the sweet spot with certain dividend stocks. I originally thought 100 was enough, but it's probably not going to be enough. So with phase two, when phase one goes to phase two, this is where I'm going to individually buy dividend stocks and load up on just like one or two dividend stocks to try to get to a certain point and really have a lot of shares in it so that its shares and dividend distribution can buy other dividend stocks. So I'm just showing you as an example in my etrade portfolio and a little bit on M1 Finance. I'll show you what I mean and with the sweet spot with some dividend stocks. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button, and I will show you an example of two dividend stocks. An E-Trade, show you the dividend growth as well. Let's check this out right now. I'm looking at my M1 Finance dividend portfolio. I'm actually at $95,443.10. So part of phase one is to get to $100,000. That's great. But there needs to be a transition. So it might take, 120,000 to then focus on phase two. This month is actually going to be an experiment, and I'm going to do it with a dividend stock that I've owned, one of the high yield dividend stocks, and I'll kind of show you what I mean, and I'm going to show you my holdings right now. I'm going to start right here. I don't want to show you what I'm starting to buy with this M1 Finance pie yet. I'm going to individually review these dividend stocks, the REITs, the 5 REITs. So the first one, I'll just go over Starbulk. I got 3 shares. WP Carey. Now Coca-Cola, I have 8 shares. Now, what is 8 shares going to do? Not a lot. Now, I just showed you the most recent revenue with American Tower. Now, imagine if I had 20 or so shares. Same with Conagra Brands or Pepsi. One Oak is another one. Being in 11 shares, that's not too attractive. But for an experiment, I'm going to go to, where are we? Got to find it real quick. Runway Growth Finance Corp. So I'm at 61 shares right now. Now my cost, I'm up $16.95. This is a high yield. This is a business development company in the financial sector. And like I said, with the financial sector, I'm going pretty hard on right now. So this one, you're not going to get a lot of dividend growth. That's not the good thing. But it's a high yielder. This dividend growth's a little slower, but there's a certain sweet spot. And I'm going to show you as an example on M1 Finance. What I'm referring to is a sweet spot with my dividend stocks and how many shares I own and the potential for the dividend snowball effect. What I'm referring to is with the sweet spot, having 400 plus shares. Okay, now look at the revenue that I'm generating estimated in March, June, September, and December. That's $500. This is on E-Trade. This is my E-Trade dividend portfolio, not M1 Finance with it's $95,000. Now look, Arbor Realty Trust quarterly gives me $276.26. The other one is Key Corp, KEY. I'm at 470 shares. That generates me quarterly $96.45. So the nice thing with a lot of these dividend stocks, dividend growth stocks, and I'm going to go over Key Corp and Arbor Realty Trust as well. The one thing with Key Corp is in the past 5 years, it's been down because, and I will blame the pandemic, 14.91%. I mean, it has not rebounded since the pandemic. At one point, it was doing very well in December, and then it took a big nosedive. And right now, it's 14.27. So the dividend yield is 5.75%. The PE ratio is 16.21. The average volume 19.30 million. The market cap is 13.33 billion US dollars. The year range is 854 to 1856. The day range is 1408 to 1447. Previous close is 1392. Now I'm going to jump to the dividend growth history. And look, this is why dividend growth always wins. So this is a quarterly dividend distribution. In 2017, it was 10 cents to 11 cents. 2018, it was 12 cents. Then it jumped to 17 cents. 2019, it was a little stagnant for a few years. 2019, 2020, 2021. Well, of course, it's the pandemic. So then it reached 19 to 20 cents. 2022 is 21 cents. So the dividend growth in 5 years is 3.68%. Now, again, they're taking a beating right now, but I have 400 plus shares, and that's 21 cents per share of dividend distribution. The dividend yields 5.89% and 82 cents. So look at what I'm generating with more shares. So the one thing I have with my dividend portfolio is a lot of stocks, and some ETFs, a lot. So in order to get to that point, which I refer to as a sweet spot, I need to get to about 400 shares with a lot of these dividend stocks. So I'm going to jump to Arbor Realty Trust. They're sitting at $13.40. So this is a REIT that in the past 5 years, it's been a little volatile, and it actually at one point it was beating the S&P 500. I'm not going to show you that. I have done numerous videos on them, but I'm going to jump to the dividend history of Arbor Realty Trust. I'll start in 2018. It was 21 cents distribution at 25, and then 27 cents, and then like a special distribution of 15 cents, then 2019, 27 cents, 28, 29, 30, then 2020, 31, 32, 33, 34, then it jumps to 37, 38 in 2022, and now it's at 43 cents in 2024. So yes, you're going to see a higher payout ratio. Well, that's a REIT. So you're going to see that 90% of what they make go back to investors, mortgage-backed REIT especially. So the dividend yield is 13.07%. So if you bought one share, you made 172. Dividend growth in 5 years is 10.57. Number of dividend increases in the last 5 years is 15. So you're seeing that with the dividend growth and how many shares I own. And I'll jump back to eTrade before I jump to runway growth with my experiment. So again, Arbor is generating me $276.26 quarterly. And again, KeyCorp is almost $100 at $96.45, which is causing the dividend snowball effect to kick in. I'm going to be eventually reaching $100 quarterly with KeyCorp, which is fantastic. And look at how much ground they gain for me just based on their passive income. So going back to M1 Finance, being at 1342 and 61 shares, imagine getting to 400 shares with this one. So I'm going to try to, and this is what I did during the pandemic when I loaded up on Realty Income and all these other dividend stocks, EPR Properties, Arbor Realty Trust, KeyCorp. I threw in money individually buying them. So this is going to be a month to experiment. Now look, I'm at 61.75 shares. Let's jump to the distribution. And there's no guarantee that there's going to be dividend growth with a lot of the higher yielders. You're going to have a better chance with some of the dividend growths like Kroger and all them. But look, 2022 is 27 cents. 2024 was 47 cents per distribution. So that was a weaker month for me, as I went over in my previous video. If you check out to see how much I made in February, it's been a pretty weak month for etrade and a little bit on M1 Finance. The covered call ETFs gained the ground for me. That was a weak month. So what if I get to 400 shares with runway growth, okay, get to that point, then leave it alone and use its passive income to start focusing on the dividend growth stocks? So that's kind of my thought process with phase two, to kind of focus on certain dividend stocks, get them to 400 shares, and use their passive income to buy other dividend growth stocks. So I did a really good job with a lot of them. I think what I'm going to do is trade off, a high yielder and a really good dividend growth. So I may do like try to get to 400 shares, goal, 2 to 3 months in Kroger, and then get to 400 shares with a high yield dividend growth stock, because I want to kind of have a balance with that. Eventually, with phase three and phase four, phase five is the one where I don't reinvest any more dividends and I take the passive income. That's going to be probably 15 or so years or more years. So I'm not really too excited about it. The high yielders. I'm not too excited about the high yielders. I'm excited about the dividend growth stocks like Kroger, like Starbucks, like I would consider Key Corp, Regions Financial Corp, T Rowe, those ones. That's what I want. I want to use this income. I want to get to 400 shares with Runway, ARC, and some of them, so I can start really throwing them aside and not really have to worry about putting any more money in, and then I can use their income, their quarterly income, to buy them, so I don't have to do anything. And hopefully when I get to phase three and phase four, I don't have to put any more money in. So phase two will be probably a few years to perfect, but I'm not there yet at phase two. So I'm kind of explaining to you phase two is kind of like where the sweet spot is with certain dividend stocks. So that's kind of my phases with the dividend investing strategy. Again, dividend growth wins. The more shares you have, the more opportunities you can for reinvesting dividends. Now, I have a lot of stocks, but it's going to get to the point where some of them I fund up enough. I fund them enough and just keep on buying dividend growth stocks. So maybe in the long run, I'll have, 30 or so really powerful dividend growth stocks. And by the time the income from these guys is really powerful, I'm hoping to generate 2,000 quarterly in the next 3 years. I think that's obtainable to use that with quarterly dividend stocks, not just these monthly dividend ETFs or these options ETFs. Who knows how they'll be effective? I mean, who knows? I mean, I don't have a lot of complete, they're not reliable. But can they help me with turbocharging my dividend portfolio and buying Runway to get to 400 shares and then focus on maybe another dividend growth stock? So this is kind of an experiment with one dividend stock and see how it does in the next few months. Again, I want to get to 400 shares and go from there and then see what happens. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. That's going to be my month of March. I'm going to call it March Madness. Just kidding. I will call it Mayhem March. I don't want to, because March Madness is, everybody knows what March Madness is, but, something that this is really good to experiment with and see what I can do with this dividend portfolio. Because I really feel to the point with my dividend portfolio, with a lot of these shares, if I get to 400, it's game time. It's really going to be powerful with the dividend snowball effect. That's kind of phase two. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Do you like my idea of phase two and 400 shares with some dividend stocks? So think about that. getting to 400 shares of Realty Income, getting to 400 shares of Kroger. Imagine being at 400 shares of Apple, you know? So that's kind of what excites me is the next potential of these with phase two. You take care and have a good one. I'm going to jump to my disclaimer, and Monday I'm going to have a video for you. So take care. As a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice. I am not a financial advisor, so don't ask me for financial advice. Do not use this YouTube channel for any form of tax purposes. This is strictly for tax purposes. This is not for tax purposes. So it is best to seek tax advice from a tax advisor. Investing is a big risk. You can gain money, you can lose money. So just be aware of that and do your due diligence before you pull the trigger and buy anything. Crypto, real estate, whatever you do, there's always a risk when it comes to investing. Take care and have a good one.